Hello and welcome. I'm William Bain, the Head of Trade Policy at the British Chambers of Commerce, and I'm speaking as part of International Trade Live. Today we'll present a global trade update for autumn 2023, touching upon the global trading conditions and some of the key issues that will come over the autumn, whether that's in terms of EU-US discussions, or indeed some of the active and live trade negotiations that the UK is involved with partners around the world. If we first of all begin with an update from the WTO Public Forum, this took place between the 12th to 15th of September in Geneva. Very much the sort of key theme of the event was the impact of green trade, what that means in terms of supply chains, how green trade can be used as a means to promote greater gender equality and opportunity around trade. And I think the sense that if the world is able to reduce some of the barriers to trade in environmental goods and services, then the potential exists for a large increase in export growth in this sector by the end of the decade, around 5% export growth, if tariffs can be reduced and barriers, non-tariff barriers reduced as well. But of course, the gathering also heard from the Director General, Ngozi Okonjo-Iweala, and the publication of the World Trade Report by the World Trade Organization. And really, I think the theme of this report was to warn people about the potential for slipping back into protectionism. So the report lists some of the measures, some of the sort of tariffs being introduced in certain countries, which potentially could lead to a reversal of some of the gains in the global trading system since 1995 and reduce exports in the coming years if this trend is continued and accelerates. So a real warning, a call for reglobalization in the WTO's report published last month. And I think the report also demonstrates the kinds of things which policymakers across the world can do to seek to reverse this. So seeing further action on aspects like digital trade, is a key driver of trade growth, both in services and goods. Seizing these further opportunities around trade in green goods and services. So the story is not entirely a depressing one from the report. It's a warning and it's a call to action from policymakers. And it is one that we at British Chambers have been encouraging the UK government and also our key trading partners to heed and to act upon, because if we do, then the prize is a revival in global trade. But if we sink back into more protectionist measures, more measures which diminish trade between the trading blocs and regions of the world, then we aren't going to have such a good time in the rest of the decade. And that warning is starkly laid out in this report. That also takes us on to where global trading conditions presently are. And we saw within the last couple of weeks the publication by the Netherlands Economic Policy Analysis group of their World Trade Monitor. So this covered data for July of 2023. And in terms of the measure X inflation, the chained volumes measure, which is the best to make comparisons of in the present inflation environment. Not so great news for global trade in June and July, because the fall in chain volumes in June of 0.6% was matched by another fall globally of 0.6% in July. Now, a large part of that is down to the decrease in trade that's occurred in China, with imports down 5.2%, exports down by 2.9%. But there is some better news for the US and the UK. So in the US, exports are rising by around 1.2%. In the UK, in July was a very good month because exports rose by about 5.2%. And that ties up with some of the measures in the and findings in the Office for National Statistics data for July, which came out just a few weeks ago. And in terms of trade with the EU, in terms of goods trade, there had actually been a 4.4% rise in exports from the UK to the EU in the month of July 2023. So a difficult picture globally, but for the moment, at least the UK is doing slightly better. I think the real picture, though, of UK trade in 2023 is that there is a lost momentum in terms of exports and services. It was a real success story throughout 2022, but it has fallen back this year. And of course, with nearly half of our exports being made in terms of services, that is a concern. And it's an issue that the BCC has raised with policymakers about how we can reverse that and see sustained and solid growth in services exports, in the rest of the year and certainly into 2024. So those are the kind of global conditions. At the moment, the Indo-Pacific economy is been a bit of a drag anchor on global trade this year. Now, many of the international organizations forecast that there would be an increase in consumer spending in China and other key Indo-Pacific states towards the second half of 2023. So we wait and see whether that transpires. And although it may be the case that interest rates globally may have peaked, there is still the ongoing impact in terms of access to credit for those high-value purchases that consumers may make, which do involve taking on credit. And of course, that could well be a drag anchor in terms of exports of those kinds of goods in the second half of the year. So a lot to play for, and the statistics we get over the next 3 months, I think, will really guide what happens in the second half of 2023. It's going to be a very busy time for policymakers in the US and the EU. Meetings are due to take place later in October on key areas of discussion between both of those key trading blocs. So issues like supply chains, steel and aluminium policy will be I think front and centre, perhaps also some of the regulatory issues that they're seeking to explore between them, not least of which AI. In terms of steel and aluminium policy, this year and this autumn are probably a key staging post on whether a bilateral steel and aluminium arrangement that emphasises the greening of supply of these two commodities can be put together. The intent being that this is initially something which the US and the EU set up, but which is plurilateral in nature, so other countries would be able to join that. The aim being that high cold steel with high levels of embedded emissions in its production is de-emphasized as a sustainable source, and greener sources of steel and aluminium are replaced in supply chains instead. The option will be there to replace those. So it really could be quite a transformative initiative. Some people have called it Steel Club, but it could transform supply chains if it takes off. And so this autumn, I think, will be critical in terms of how the final arrangements will be and how open it will be for other countries to join. In terms of UK-EU trade, many of the key issues will be discussed in the Domestic Advisory Group meeting in November. The joint meeting with the UK and EU DAGs, and then also the Civil Society Forum on the 7th of November too. And I think some of the key issues that business is raising with policymakers in London and in Brussels, as well as the sort of remaining elements of what came in January 2021 in terms of additional paperwork and red tape, not least of which things like VAT and rules of origin, some of which are embedded within the fact that the UK is no longer in the single market customs union common VAT areas and is trading under a free trade agreement now instead. There are some big issues on the horizon that we can see which are going to have a major impact upon UK businesses exporting into the single market, and which business groups and others are very keen that policymakers cooperate on, are fully cited on, and work on any necessary mitigations together upon. So at the moment, we have just seen the first stage rollout of the EU's carbon border adjustment mechanism. This is the EU's flagship measure to deal with carbon leakage. That is, some countries basically offshoring their carbon emissions in terms of production to countries with less onerous regulation and standards on control of emissions. And the first stage of CBAM, if we can call it that, is reporting requirements on 6 sectors, which include electricity, iron, steel, aluminium, fertilizer. And by the 31st of January next year, the first reporting phase will have finished, and companies outside the EU will have to be speaking to the importer of record within the EU in terms of providing the information about embedded emissions contained in products within those 6 areas. And that reporting requirement will really kick in at that point. Now, there are some easements and mitigations that have been put in place with this. So in terms of the sort of reporting, you can deal with what your national legislation outside the EU provides for. So that makes it a little bit easier for compliance purposes. But this is a major change, a really seismic change in terms of really engaging with production processes for many products. And of course, as we get over the next couple of years, all of the products within the EU's emissions trading scheme will be in scope of CBAM, first of all, for the reporting requirements. And then, of course, in January 2026, any differences between products and the carbon price of products from the non-EU market compared with the EU will be due to be paid by the exporter. So it really does become, from January 2026, a sort of carbon tax for commodities and finished goods, where the embedded emissions and the cost of those emissions exceeds what production would be within the European Union. There's a slight de minimis rule, so it's goods over £150, which are in scope at the moment for the reporting requirement. But CBAM is going to really, I think, revolutionise trade between the EU and its major trading partners. It could spark a whole range of CBAMs being adopted across the world. The big issue for policymakers in Whitehall and Westminster is whether they seek to have a similar CBAM for the UK and how much linkage there can be with the EU model. But the consequence for business, if there isn't a linkage, if there is continued divergence both on the carbon price and the regulatory environment in relation to that, is that it will cost more to export goods to the EU. So in a sense, these are new requirements which businesses really seized of and is working, with policymakers and businesses to try and get through the best they can. But we really do have entered a new era, I think, in global trade with the existence and implementation of policies like CBAM. We're also expecting this autumn that supply chain legislation looking at corporate responsibility will begin to work its way through the EU institutions. That will also have an impact upon third countries like the UK and companies registered here. There are big changes coming in terms of EU VAT in 2025 that will expand its coverage to third country service providers. Big changes in customs, a single customs window, European Customs Authority being set up, reform of the UCC, the Union Customs Code. And then the other measure which the EU has been discussing in recent days and has been discussed at the Parliament is the anti-coercion legislation, which will also affect supply chains with its key partners as well. So just in trade policy alone, we're seeing a great degree of legislation coming through, which the UK as a third country now has to respond to. Its companies having to implement the implications of that legislation if they want to sell their goods and services into the single market. And this will be a continuing factor around our new UK-EU trading relationship in the coming months and years. Another issue from the EU, which is also affecting UK companies, is the new sanctions on Russia, which came into force at the weekend. So the EU sanctions here involve companies, including those outside the EU, attesting that their steel or iron, and indeed any processing, downstream processing of that to make a finished good, did not come from Russia. And so the evidential requirements are quite onerous, requiring sort of smelt level detail to prove that both the primary production of the steel and iron in the goods and any secondary processing did not occur in Russia. Now, if we turn to UK trade policy specifically, so this is a big autumn, a big winter really, in terms of the pipeline of trade agreements which the UK is seeking to reach. I think principal amongst these is the negotiations with India, which could be set for an interesting phase. I think most observers still believe there will be some time to go some months yet before the prospect of any agreement. I think where business stands on this is that it wants to see an agreement which is deep, which has very good market access, particularly for services, and our priority is depth over pace in terms of how the agreement is done. There are also, I think, concerns about the protection for intellectual property as well, which are key for investors and companies here in the UK who want to ensure that their patents and other IP are suitably protected in terms of economic involvement in India. But I think there is still every prospect that a fairly deep deal will be reached, one that has the hope of increasing bilateral investment between our two countries, and also reducing barriers to trade for UK goods and services in a very fast-growing market in a dynamic part of the world. The UK is also negotiating trade agreements with a range of partners. So with Canada and Mexico, there are continuity agreements which were adopted just before or after the end of the Brexit transition period, which both partners now want to renegotiate alongside the UK. And so, whereas the Mexico negotiations are going at a more sedate pace, not likely to resume until January of next year, negotiations with Canada have increased in pace, particularly since the UK's accession protocol to CPTPP was settled. Now, there are some big issues for manufacturers and traders in terms of these negotiations. So the continuity agreements allow accumulation of EU material with UK material in order to still enjoy the tariff preferences within both the Canada and Mexico continuity agreements. And so these are sort of time limited. So in terms of Canada, these expire in April of next year. For Mexico, it is in January. So I think the hope is that we see an extension of these current arrangements for the duration of these negotiations. And that would cause the least disruption to businesses here, provide certainty and continuity. And we will await announcements in the next few weeks around that. The UK is also involved in important negotiations with South Korea, with the Gulf Cooperation Council, with Switzerland, and probably in the next couple of months or so, we'll begin these with Turkey as well. So again, what you can see is a sort of phase of UK trade policy where it's trying to upgrade agreements which were already made, looking at importing much more liberalising measures on digital trade, green trade in some of them, but particularly in the digital trade side of things, sorting out some of the sort of loose ends around rules of origin, and looking in the case of Switzerland, obviously, at market access and services, which was not within the continuity agreement signed after Brexit. So a lot of activity going on in terms of these. As we get towards potentially a general election next year, all political parties are looking to engage with business about what would be the next phase. So lots of ideas being discussed, like potentially digital trade agreements with the US, looking at what can be done in terms of the LATAC countries, Africa, a big strategic priority, it seems. And then also what further deals can be done in terms of the Asia-Pacific region. So countries like Indonesia and Thailand are not in CPTPP. but yet the UK might want to deepen its links with those. And the case for FTAs is one which should not be dismissed with those countries. So we can expect a very active period as things like CPTPP, accession protocol are ratified, and the UK formally begins to use that agreement at some point in the next 12 or so months. But then also quite a lot else coming through the pipeline as well. One thing I think is going to be much more of a feature in the second half of the decade, once this initial flurry of agreements has been made, is whether business is getting the full value out of them that it can be. And that's why the BCC called for the setting up of what's now become a preference utilisation unit within DBT, which is now working to get SMEs involved with these deals, which are now active and can be used. Look at how they can expand their export capacity. That is a really good thing, because the test of these trade agreements is not what all the boffins think about them, but it's whether businesses can use them, and whether businesses can use them to leverage more trade and investment. That really is the test that these agreements will have to meet and face. So I hope that's a useful summary of where things are at the moment in terms of the global trading conditions, key things happening with the US and the EU, and what's happening with UK trade policy. Of course, 2024 is a massive year, tipped to be a year of some global recovery in terms of growth, and of course UK and US elections, and elections for the European Parliament as well. So the landscape may look quite a bit different by the end of 2024, and it will be intriguing what that means for trade policy. Thanks very much for joining us, and we look forward to your questions.
Well, thank you very much, William. That was an incredibly informative talk, and a fantastic way to start the day. If it's okay with you, I'd like to ask you some questions. Going back to the beginning of your presentation, you mentioned global trade having fallen over the months of June and July. However, at the same time, you also commented on the fact that UK exports have actually gone up. So my question would be, what do you think has been the main driving force for this increase?
Well, there's been particularly strong increased demand in the EU for things like chemicals, pharmaceuticals and medicines. Also an increase in transport vehicles, cars, and also other manufactured goods. So it's been sort of the last couple of months broad-based. Obviously 2 months, it's a nice trend, but it's not a confirmed trend. So let's see if things are sustained over the coming months. I mean, I think so much depends upon where supply chains are at. Sometimes people are importing more UK chemicals or pharmaceuticals because it's a period of sort of gathering stock, so that can be seasonal. But I think the fact that the growth in exports was broad-based is a good measure. Of course, globally, I think a lot will depend upon where US consumers feel, where consumers in Indo-Pacific feel in the second half of the year, in terms of whether we see that sort of uplift in exports, which the IMF and OECD were forecasting for particularly the second half of the year, or whether overall globally it's a quieter year on trade than we might have hoped for.
And do you think that the recently the Bank of England base rate finally stabilised at 5.25%? Do you think this will have a positive effect on UK trade in the months to come?
Well, I think for households to have more confidence in their finances and to feel that the squeeze isn't going to get even stronger on them could be important in providing, one, both access to credit for higher value goods that they may wish to buy, whether that's our goods being purchased in China or in Germany, or goods that we would import ourselves through our own consumers. So I think that is important. The availability of credit, people feeling that the cost is not going to go up further. I think it also helps production. Our manufacturers have been experiencing great volatility in prices of inputs. So I think it should make for more consistent pricing. So yes, there should be some positives both on imports and exports if we do see a sustained levelling off of these rises in interest rates, which have been, of course, a facet of what's happened in the UK, the EU, the US, and also in the Indo-Pacific region as well. So it's better news for consumers, better news for trade if we've seen the back of interest rate rises.
And following along the same line of encouraging further exports from the UK, another point that you covered in your presentation was trade agreements. Since Brexit, there have been actually over 70 trade deals. And you mentioned the examples of Canada, Mexico, and India. So I wanted to touch a little bit upon the India trade deal. I know that some people think that this deal should or could have been finalised sooner. What do you think might be the principal reason for this agreement taking longer than expected?
Well, there's been a change in attitude in the Department for Business and Trade, changed its name as well. It was the Department for International Trade until earlier this year. Since the summer of 2022, if you remember, the Prime Minister at that time wanted a deal by Diwali 2022. What is happening, I think, amongst ministers and officials is that they're prioritising the depth of the deal over pace. And I think from the current Prime Minister down, that is the sense that you kind of get. However, we are getting into the political calendar where there are going to be elections in both India and the UK next year. So I would say that certainly towards the end of this year into early next year looks the window for a deal to be reached. I think there are still important areas around things like intellectual property, where business is looking for more certainty in the protection of patents and other key IP. Clearly, the big issues will be around market access in goods and services. How much regulations can be eased to allow in UK service providers, on what terms, what in-person service provision, and overall what will happen then on tariffs. Scotch whisky is one example of a good which is highly taxed on its import in India. And so people will be looking for, I think, a deep and balanced deal that allows for good market access for products, but services is the real winning area for the UK out of this. So we'll be looking for strong market access there, and the business travel flexibility to allow people to be able to make the most of these new opportunities that the agreement may have. So I think there is confidence that a deal will be reached. When I speak with businesses both here and in India, they see that a trade agreement would very strongly result in increased bilateral investment and increased trade between our two countries. And it's a very vibrant, growing economy with a very much growing middle class. So could be the source of a decent amount of UK export growth in coming years.
And you've just mentioned there, William, making the most of these agreements. So what would be your advice for SMEs in terms of what do you think is the key to getting the full value of these agreements?
Well, the BCC supported and called for the establishment of what's now the Preference Utilisation Unit within DBT, which is working with small businesses to identify how, if they have exported in some markets, how they can export in the markets covered by the new agreements. Or if they've never exported at all, how they can take the first steps to using these. So I think the first thing to do if you're a new exporter, if you're exporter curious, is to speak to your local chambers, speak to your regional DBT representatives, and there are new representatives and new support when we put in place, I think, in Scotland, Wales and Northern Ireland in the coming months to supplement what's there on that. And to, I think, get the sense that if you have the processes within your firm or you get other providers to do it, to do your customs declarations and other export paperwork, if you've managed it in terms of trade with the EU, let's say, then you can have the confidence that it's not going to be any more difficult in terms of entering new markets with new customers who may be excited about your product. So I think having those good local networks, DBT having this sort of central unit which is kind of driving things, these are all key. But I think the key thing for companies is that sort of realization that if you export, it can make you more productive, make you more profitable, diversifies your customer base, and exporting companies tend to be better performing companies. So go out there and try it.
Well, thank you very much once again, William, for sharing your insight and advice. And we look forward to seeing what happens over the coming months, and especially in 2024. Thank you very much.
Thanks, Joseph. Thank you.